The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful Thursday, November 15th. We have a market in transition. I suspect that we are awful close to a short-term low out here. If you've been listening to the show over the last 2-3 weeks, I've been projecting that we're going to get down to 1350 on the S&P cash. And where are we at? 1355. We got to a low of 1348.05. And I suspect, 1355 here. I suspect we're probably a short-term low. I don't know if this is going to be big or small, but we'll get to that in a little bit. But I think that we went ahead in the newsletter and closed some of our positions, and we'll talk about that in a few minutes here. But volume is good, 2.5 billion shares. Suggests we're probably going to come out with about 3.7 billion shares tomorrow. by the end of the day, and I suspect we're probably not going to have a lot of movement tomorrow. So if we get a little bit of run-up before Thanksgiving, Monday, Tuesday, Wednesday, we in a light market, there are a few things going on out there that make me think that this may be a short-term low. And maybe we could even rally up to the end of the year. It's hard to tell right now until we get a little reaction to these lows, but pretty good support in that 1350 level, and it should get, I'm kind of thinking we're going to get a bounce to 1385, 1390, something like that in the S&P cash, and at that point, we're going to want to be setting up our next ABC down. I'm trying to find some real nice, fat, heavily short stocks that have hit some kind of decent support level that we might get a short squeeze on for a day or two or three in those kind of trades. Too dangerous to probably think we can stick a trade out that's going to last more than a few days in this current climate. But we saw today, and even at the end of yesterday, a huge, massive put buying on the S&P. And that, and I'm not talking about the minis, I'm talking about the big, full, big, massive contract. When you got 10,000 blocks of S&P puts coming out, pretty good indication that someone's buying a lot of downside risk, and normally those people are what you call wrong. When the market was high, I brought it up on the show, it had to be 2 Mondays ago, that right before the election, that there was a huge amount of downside put buying, and it was all from about 1390 to 1350 on the S&P cash. And it looked to me from the size that was probably hedge funds, guys on the street, not wanting to sell the current positions unless they were absolutely forced to, but buying that protection and taking the money so that they could continue holding those stocks throughout the end of the year. This looks to me more like a little bit of panic buying. And, of course, it's no small street name out here buying 10,000 contracts at a whack, but that happened at least a few times today. That's been reported out there by Bloomberg. So we've got some big people wanting some downside protection. I'm going to have to investigate. I didn't have a chance before I left to come out here to the studio today. It is a beautiful Thursday, November 15th, and what is today? It is Bundt Cake Day. I'm not exactly sure if it's any different than any other cake out there, but apparently it's a very easy cake to make. But it was actually declared Bundt Cake Day in the state of Michigan today, and internationally they're calling for a International Bundt Cake Day. It's very attractive. I guess the whole thing is somewhere in Michigan they make all these fancy pans for the bundt cake, so the governor declared it was Bundt Cake Day. But everybody just puts a little bit of powdered sugar on the top, and they look pretty cool. You know, I haven't had a lot of cake in quite a while. Tried to cut out a lot of sweets, but It does look interesting out there. UK retail sales came in light today, pretty much signaling that we were exactly where we're thinking, which is Europe's in a recession. Retail sales fell 0.8% in October from September. And this pretty much on the whole European continent out there going into recession. They were expecting 0.1% decline, according to economists. In the daily newsletter, we talked about being short. My Path of Least Resistance newsletter, we covered, cleaned out a few positions today, or actually yesterday. I'm actually looking for those short stocks that may pop into a short squeeze and sell into that movement, and that may be my last trade until we get back up and see if there's any energy in this market. I suspect not a whole lot, and the next leg we're going to want to take is probably down yet again. But we had some nice trades. We were in SDS at 55 or better. We're probably out at 60.50 or better, so a good $5 out of the SDS. We were short hog, and it should be around 48.30 is where I was short. Should have covered mid 45s yesterday, so took about a little less than $3 out of it. Adobe, we got about $1.75 out of. Amazon puts. This is the second round on Amazon puts for us. In the newsletter, we bought 235 puts at $9.50 or better. I think most of my customers should have been in around $9, low $9, and could have gotten, I think, $8.70 out of them. But bottom got out at $15.50 or better. I think they got to $16.50 or better. But as I said in my newsletter last night, you always sell when you can, not when you have to. And checking Amazon, what is it printing off here right now? Still a little weaker out here today. This thing probably could go a little weaker. I'm expecting a little pop out of this thing for expiration, and a little bit of worried about chewing up what should be a lot of premium over the holiday weekends. So I wanted to get out of there. I got it up to $17.25, I guess. So left a little bit of meat on the bone for someone else to start grizzling on out there. But sell when you can, not when you have to. And, of course, as I remind people every time I talk about puts, puts are to reduce your risk, not take on more. So if you wanted to buy 100 shares of Amazon, and you would work out with your risk reward, you'd only buy one put. You wouldn't buy 5 because it's a whole lot less money. Puts and calls and options, when you buy them naked, are a way to reduce risk. But, of course, you're always looking for some kind of giant surprise to make these things really pay off. A lot of times you don't get them, but the first time we made 150%. What's this? 950. We're out at 1550. So what's that? 60, 70%. Not a bad move on the path of least resistance in the last cycle here. We've got some big guys reporting. Paul Tudor Jones, who has the Tudor Investments. Basically, we start seeing some of these big guys coming out of Apple. Their requirement to actually file their holdings has come out over the last couple of days, and what we found out is Tudor went from 103,000 shares of Apple down to 9,200 shares. He picked up 100,000 shares of Facebook. Picked up 150,000 shares of Groupon in the last few days, probably, and went from 400,000 shares of Zynga to 650,000 shares of Zynga since Q2. Boy, I don't know about that. That may be the one that gets him. David Einhorn, another big guy on the street, big man on the street, besides calling for the CEO of Microsoft to get out of Dodge, and he's done that before, but continues to do that. He runs Greenlight, of course, famous for shorting CMG and some of these other stocks, and coming along, being a pretty good idea of both long and short side, but he's known as a axe now on some of these. If he just mentions the word short, everybody and their dog's on it. What he's out of now is Microsoft, Expedia, United Healthcare Fusion. He has bought Babcock and Wilcox, AECOM, and Knight Capital. So a lot of these guys getting out of some of these stocks that they'd been in for a while. after the pop in Microsoft, you can see why some of these stocks are coming down. These guys can have a lot of shares. He sold, 450,000 shares of Apple. I'll give you just a little idea why it's down so much. But I wish he probably thought that he would have sold the other million too. But maybe he's going to wait for the pop and try to get rid of some more of it. But watch him. He's a pretty good guy to watch. He's not only winning on Wall Street, but winning in the poker tournaments that they air on TV. You'll be able to catch him a few times out there. Skype's giving a free month of unlimited worldwide phone calls away for an entire month. Of course, they're part of Microsoft. Microsoft's really getting ready to push the whole Skype thing with Windows 8 and Xbox 360 and 720. You have to give them your credit card, so they'll start charging you if you don't call. But at the same time, if you wanted to make a bunch of phone calls, I've got some of those Walmart credit cards out there that you can get and put $2 on and give them a number. Not a bad deal. Anyway, what else we have? The great iPad mini caper. If you've watched Goodfellas, a movie that's on a lot, it seems like, if you turn through the channels, repeats a lot. An excellent movie. But in that movie, you'll see that they actually looted a huge amount of money from the cargo building at John F. Kennedy Airport. At that point, it was the Lufthansa, and I think they walked out of there with about $4 or $4.5 million. It was an inside job, and if you remember, everybody got whacked. They like to say everybody's getting whacked. But kind of interesting that two thieves drove in a semi, backed it up to a bunch of skids of iPad minis, and there was 6 skids. They got 3 of them in the truck before someone said anything. They said, hey, we'll get the paperwork, jumped in the truck, put it in gear, and took off. But they're thinking maybe someone knew a little bit more, and probably going to be sweating into anybody that knew exactly how many of those iPads were there. But they'd been there about 15 minutes after they'd gotten off an airplane, and the big iPad mini caper is out there. But 4,000, that's quite a few of them. I bet that they were insured, though. 96-page report came out today from the congressional Republicans. I'm going to just say that. I have a feeling. But anyway, I thumbed through it today. It is pretty damning. And the big question would be to ask is, why is Corzine not under indictment? Because pretty damning. Anyway, they're already talking for the head of the CFTC's head and asking one of the guys that's been on our airwaves a few times to take his place. So Headsville roll. Headsville roll, the guy in Hogan's Heroes. We'll be back in a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, some other news out here. After 2 months after it was announced, Amazon's 9-inch Kindle Fire HD is finally ready to go on store shelves. The retailer announced today that the $299 Wi-Fi tablet will begin shipping today from Amazon's website. It's already sold out on the website. It'll be available, I think, after 5 o'clock today at Best Buy stores. The $449 4G LTE version won't ship until next week. I just don't know. We're not going to. Maybe there's a business opportunity to want to buy one of those with LTE in it. I haven't figured it out. With it being able to hook your tablet up to your actual cell phone, if you already had a 4G one, I don't know whether or not I'd want to spend the money for an additional contract just to have one, just to have data on my laptop or even on my tablet. It's just kind of hard to see, but pretty good product. I wouldn't buy it. I suspect that the Google version is so much better because, of course, you have access to the Google Play Store instead of the limited amount of things in the Kindle Store. And, of course, they're always trying to it's the heavy sell, let me put it that way, on the Kindle Fire. Not bad hardware. If I got one free, I'd probably root it, put on a standard third-party Android phone, software for it for Kindle, for Android and the tablets, and that would be it. Groupon COO, they got yet another one. Yet another COO. There's got to be an abbreviation in there. Groupon, of course, ship that's busted in half and sinking. It continues to go through its same COO for a third CEO in a year. Don't think this is going to make any difference in this company whatsoever. Just a matter of time before this thing blows up in everybody's face. Spotify today plans to begin rolling out of its first ever browser-based music player. The Verge has learned from sources close to the company the web player looks a lot like its desktop counterparts on the Mac and Windows, but it only has a basic feature set. I've been having kind of a little rollout here about what happens with these music services. I'm kind of up against Tom and Steve on what's going to happen in these. I think that they're going to have some fairly decent weakness, and that Apple getting into this is not going to be any better. I've got the first little bit of that coming out today, and that is or maybe it came out last night, and that is some big ads talking about don't give Pandora lower prices for our music. It's signed by about 150 of the big bands out here, both old and new. And I think this is the first shot across the bow. Pandora has gone not once but twice already to get prices lowered for streaming online music. They still really can't make any money the way this is right now. And I continue to see that it's going to be one of those things where it's going to be problematic. But I don't think it's as clear sailing. Everybody thinks that Apple's just going to get into this streaming music business, be able to sell music as you're listening to it. I don't know about it. I think that there's a lot bigger. I think everybody in the music business just looks and sees what Apple has done to that music business so far, and I think they want no part of Apple, and they want no part of the streaming music business. They know how hard it is killed their revenues. And when you look and see what a lot of the Sound Exchange, which is the company that the government formed, a government-sponsored enterprise, as they say, a GSE, to collect all this money, to go back to the artists, they haven't, in, 8 years or whatever, paid out $1 billion. That was like what artists would make in a year before streaming music came out. There's tons and tons of musicians, tons and tons of music that's been out there for a long time. And I think these musicians are pushing back. There's just nothing in it for them to give a great deal to Apple, or in this case, Pandora. But I think this also puts a cloud over whatever, we'll say Xbox and some of these other streaming music systems that are already out there. This may be the business that everybody loves and no one can make a dime on. But I think Apple thinks that they're going to be able to roll the entire music industry over. I think this is the first shot across the bow on that. Anyway, when we come back, we're going to start looking at some charts out here, and I'm going to start showing you what I'm looking at in this marketplace. We're going to look at volume in the New York Stock Exchange Consolidated Tape, and we're going to take a look at where this thing may expire tomorrow. We've got a phone call also, so we'll be back in just a few minutes.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we've got a phone call, so we're going to go right to Frank in West Palm Beach, Florida.
Okay.
How you doing today?
Well, I'm a musician, and like you said, there's a lot of hustlers out there, and that was one that everybody ran to. Desperate people, desperate people to get somewhere, and you get a lot of pitfalls,
Okay. So you were talking about Netflix today?
I was over on trying to do a put on Amazon. I asked Tom when it was at 35, should I do a put? 235? When it was at 235. Look at it now.
Yeah. Well, I covered mine yesterday, but I already said that. But, yeah, it's, I was thinking that this thing probably hit 180, but I think that we're probably, you're getting into a point now where everybody and their dog is short. We're probably going to get one more push, and that push, they could keep this thing up all the way to the end of the year now with as much short interest as piled into this market.
Yeah.
That's the problem, is you got stocks, and you're looking at one here in Netflix, which is the same thing. This was all a short covering rally that was fairly much engineered. But I'm starting to see more of those over the last few days as, heavily, I think Netflix was somewhere around 23% short going into these this huge run-up that it had. 5 puts on Netflix. Yeah. I mean, that's the problem, is all these stocks are getting so shorted. You got to take a lot of time on these things. You can't. I had the December Amazon puts. I don't think you can go out 30 days right now. The risk is too big that you are going to get a short squeeze in some of these. What are you thinking about doing on, you still have these Netflix puts or something?
Oh, yeah. I'm hanging in there. I have the January 65s, and I'm down $400, and, the next day, I'm down 200, then down 100, then down 400, up and down, up and down.
Well, I think you're going to know real quick whether or not you need to get out of these things. If this thing doesn't start dropping back down, but I mean here you've pretty much closed the entire gap. Icon, you were basically a victim of Icon out here engineering a short squeeze.
Yeah, I know. He came out with his crap. Before it was Microsoft, and before that it was the the other guy that said upgraded it.
I think you got to say it's a beautiful scam.
That's why I'm holding on, because sooner or later it'll go down to the bottom of the mountain.
I don't think there's been a stock that he's actually bought, but he buys up 9% because he can't buy whatever it is 10% without filing. So he buys up 9%. He engineers a short squeeze, and my guess is he says, well, of course they put in their poison pill, so I'll just go ahead and sell it now after it's rallied about 20 points, and I'll be out. But what I'm surprised is no one's brought that up on any of the shows he's been on, like Bloomberg or CNBC. Are you really just running the biggest scam out here? But as far as I can tell, there are several of these guys out here doing this now. If you find one of these stocks that's got, I think Netflix down there at that gap at 55, I think it was short like 25%, which is, that's a tough one to be short anywhere at any time. But much less have somebody like Icon come out there and blow a lot of smoke and sunshine up everybody's rear end about this.
I'm waiting. After it blows over, I know that Netflix is going to be coming down the mountain.
Well,
I know it.
I mean, you've got Amazon coming out with their service. You've got Hulu Plus now with their service. You've got Kindle. Amazon, with their service. Everybody, the Hulu Plus one is kind of interesting. They want another $8 or $9 or something now to watch first-run TV shows. This is getting awful segmented. I don't know how many people are going to spend $40 getting all the different services to get everything. It almost makes cable look like a better deal right now. And that you're paying one bill, at least you got pretty much all that stuff available, at least at some level. So, but
I went and even put in an order to buy the 70 puts on Netflix, the Januaries, try to get more, because it went Netflix went almost all the way to 90.
Well, I mean, if I would
90, and now it's all the way down to 80 something, and it's going down. It's going to go down.
CSTR. I mean, you want to watch probably for a good clue on it. I mean, Coinstar, same kind of business. The only difference between Coinstar and Netflix is that, of course, they really don't have any streaming. But I think that the same weakness that you see in Coinstar should be in Netflix, just because of the lack of decent movies coming out that's available. I got rid of Netflix, I don't know, 2-3 months ago. Just because they quit carrying a lot of the DVDs that I liked, which were a lot of documentaries that you couldn't get. They want to push streaming those so they don't have to carry them any. And I hate watching everything in standard definition. I think I have the right to get everything on Blu-ray, but of course almost none of those they'll stream in high def. So I kind of got ticked off at them and got rid of it. But at the same time, we're coming off the worst summer for the movies, for the movie industry in 10 years. That's got to continue rolling over through probably the next 3 and 6 months of this movie. And
can I give you another stock?
Yeah.
STX, I have that. I'm shorting that to...
I want to bring this up just because I've started this rumor myself. That is, I will not be back for Magic Mike 2, just to let you guys know. And all you girls that are out there, mostly, not the guys so much.
STX, I got January's there. And
January puts?
Yeah, and
which ones?
I think it was I don't know, the 70s, the 65, 77. I'm not
You're
sure.
talking Seagate, STX?
Yeah, STX. I've been holding on, and it took me for a ride there, you know.
Well, it's printing out here at around the 27. So what do you?
It was 26, and I was down $100. So,
okay. So, but which ones do you have? What strike?
I think I have the what is it, 65?
No, it can't be 65.
Can't be 65.
No, it's printing out at $26.
Really?
You're talking about Seagate, right?
Yeah, my positions are STX.
Okay.
I have the STX, the 28 put.
Okay, there we go. I think you're okay. Seagate, probably the biggest on the inside part of this is that they are continuing to keep prices higher than a lot of people thought that they could.
Yeah.
That was that last little bump when they came out with their margins, and the market took it right back down to these lows.
Yeah. I was down $85 this morning. Now I'm down 105. I'm waiting for it to just go as far down as it can go. I don't know how far down it can go.
You want to sell it when it hits $23.75.
I got plenty of time. I'm in January.
Yeah, but that's where it's at. I think you could probably get that if the market continues to weaken. But that high volume day that came out here, and that was on 6/29 with 90 million shares. You're going to have a tough time getting through that, but that's 23.75 is going to be extremely strong resistance, and that's actually the place where you might want to go long this thing.
Yeah, well, that's where that's exactly where I'm going to get out. I'm waiting, you know, because they had me, Seagate had me, man, I was $700 down.
Yeah.
When that thing went up to 29 and 30, I said, well, I'm holding on.
Good enough. I want to thank you for the phone call. I'm going to get to some other stocks here today. You have a great day out there. That was Frank in West Palm. And what I wanted to get to is a few of the stocks out here that are moving. Let me see. Everybody's been asking about this off and on, so I'm going to go back to it just to see if there's anything else out here. Don't see a lot of movement in the market yet that would say here. Probably looking for a few points up in tomorrow's expiration. We got, 1353, 1530, 13, he said, 54 on the S&P cash. So we're down 2 points. Volume is 2.7 billion shares. A little bit more than you would like to see, but I suspect this is the end of expiration. I don't think you're going to see a lot of movement tomorrow. If you do, it may be a close out at like 1360, 1365 on the cash. So I'm looking for either Monday, Tuesday, maybe even Wednesday, where you might have an 8-hour or 24-hour period of short squeezing into Thanksgiving. And that's what we're going to be watching out here for. That is maybe you get one little bump. You're going to have a few hours to get out of these things, and that is it. Wanted to look at natural gas, and I don't have a chart for it here, and take a look at what the contract was. It's up, where's it at here? It's off a penny now today. This $3.75 range is going to be fairly strong. We're already starting to see some people short this thing. And from some reports from Bloomberg, you got a lot of people lining up right at the $4 range to start selling heavily into natural gas. Started seeing a lot of reports out there that a lot of people that have their natural gas wells turned off are going to turn them on at about $4. Probably starting to see some fairly stiff resistance. If we get a real decent cold snap, that means that natural gas is really going to be used. This thing could probably break through 4 and run through $5 into the probably January 1st of February time frame. So you could have another 25% move in natural gas. It's all at this point going to determine on how fast people are using it. If they can fill those tanks up faster than people can use it, it's going to go down. If we get a cold snap, this thing can take off and rip some heads off, especially with a lot of people starting to go short the or the natural gas contract here above $4. If it can break it with volume as you watch that contract, look for $5, and I don't think that would be too far gone. But the whole thing is just how fast can you empty those giant caverns full of natural gas. But be aware, if this thing doesn't break $4, it's probably going to try to move back down to about $3.25, $3.30, something like that. Not the end of the world, but I have to be keeping an eye on it. Oh, I wanted to look at Skywark Solution. Everybody keeps on calling about this stock. I have a feeling there must be somebody out there on one of the Bloombergs or CNBCs talking about it a bunch, because I get more emails about it than just about anything. I still don't see where this thing has come back and retested that low of $19.21, which I think it's going to do. Or at least get into probably $19.50 with lighter volume before this thing starts to run. Apple, I've been predicting it's going to go down to $5.22. It got awful close out there. Got to $5.25.25 today. Yeah, $5.25.25 today. So about $3 off my target for this, and we're going in to those lows. The volume probably going to be good enough out here to test or come close to that May 18th low at 26 million shares. So probably a little bit more than a lot of people would like to see. Let's see what we have out here, just make sure. 20 million shares I'm showing, so yeah, 21 million. So I think we're going to probably have enough by the end of the day to at least equal that 522 low out here that we've previously seen, which would not be a great indication to come in here and buy this thing. Would suggest that maybe you get a bounce out of these levels, maybe up to this gap at 580, and then one more retest of this 522 area down here. So we might have, could this thing rip $50? No big deal. I can imagine there's a lot of people short this, just like short Netflix, short everything. We need to really get some decent positions again. I think we're going to need this market to buck off some of the latecomers to the short party out here and start looking at a much better level to come back and hit and start hitting at this once again. ARM's holding. I want to take a quick look at it again. It's holding up here fairly good at these highs. So you have to put light volume. This thing could snap back to 29 in a hurry, so don't get too fired up on this. You certainly don't want to be buying it up here at these levels. Wanted to look at some other stocks here, so we'll go back here and start looking real quick. ZAG, getting into the Christmas season. I played this a couple of times, and I think, where was it? It's somewhere in here when this thing went to that $17. That's what it was last time I played this. This thing had a great run. I got in at about $12. Around that August 8th, 2011. This thing ran up to the high up August 15th and had kind of an exhaustion move. But these guys make a lot of the covers for phones and all that kind of stuff. This actually is not looking too bad. They had far too much volume down here on the August 22nd low of this year at $6.82. We're looking for a whole lot less than 4 million shares, and not a bad looking chart out here. We're in the less than a million shares back in as we come back in these lows. Maybe a nice little play here for Christmas if they can get some decent movement going on selling cell phone accessories. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
I know everybody wants to get long here fairly quickly, but I'm thinking maybe a little patience. I think the more I'm looking at the volumes and stuff, I'm thinking we might have a flat expiration tomorrow. And probably that movement, that short pop that I'm looking for may come Monday, Tuesday, Wednesday as volume gets real light and we go into the holiday vacation. Of course, we're going to be closed next Friday, the day after. It's just a half day anyway. But as volume gets light, one of the things you don't want to be a lot of times is short. Now, I don't think that there's any news coming out about the fiscal cliff next week. I think a lot of it's going to go and die down. Some of this drum beating is happening because of CNBC. I'm kind of a little worried about what they're out here doing, and that is they're kind of pushing an agenda out here, and I almost suspect that they're going to be on the wrong side of this. And you know, the idea is let's make a deal. Well, if your daughter is on heroin, is there really any deal to be made? You just get off of it. You don't like say, well, we'll just do half methadone, half heroin. It's a spending problem, not a taxing problem. We could tax any level we want, and they're still going to be spending $1 trillion more a year than we drag in. Maybe we'll get a start on this thing. Maybe they'll talk about it. But I have a feeling this is more about beating up a certain select amount of Congress and trying to force them into some kind of grand deal. You know, they kind of have an issue going on out there with it. Anyway, I wanted to get to Tractor Supply. Not a bad-looking chart out here. There's some others that might do well in the retail run once this dies down. But I have a feeling that when we see things like people buying 10,000 full S&P put contracts at a time around these levels, that we probably come in to at least a short-term low. And some of these things may be fine. I haven't seen a lot of energy back down in Tractor Supply yet. No big volume days down. TSCO. This thing took off like a rocket on 7/26 with 4.2 million shares. We're coming back into that level about 530,000 shares or something. This is doing exactly what a stock should do that you want to buy. You buy the retrace, you buy it when it comes back into where high volume was with low volume. Not a bad looking chart. There's some out here. I don't think this one's short enough to get anything Monday, Tuesday, or into Wednesday on a light volume run in this market. But you know, maybe after Thanksgiving, maybe things look a little bit better. Some of the other ones out here that look like they could be making some lows. Let me see. There was some of these out here that kind of caught my eye. Coke was probably the most interesting out here. This thing is still below its previous low, but volume is light. It needs to close back up above $36.28. That's the June 4th low. But you had 20 million shares. Coke came back into these lows, and over the last few days, you didn't have anything close to 20 million shares. 12 million, 11 million, 10 million, 12 million, 13.5 million, 9 million. So not a bad setup out here, but this thing is going to have to close back above that previous $36.28 low. So there's some stocks out there starting to give some green shoots out here, and thinking that we might have at least a little bounce out of this marketplace. Of course, Walmart came in probably putting the old Baby Ruth in the punch bowl today. But we'll be back tomorrow. We'll try to find something to make some money on. You all have a great and safe day. See you then.